Welcome to FOMO on the Schwab Network. Today, our FOMO stock is Fubo after running up now 324% on the year following a pretty major deal, of course, with Disney. So joining me now to talk more about perhaps the upside we could see here for Fubo is Diane King Hall, senior markets correspondent for the network. So Diane, frankly, I did look at this story. We discussed this story earlier this week, and I was like, a phenomenal story. I wouldn't have imagined we would continue to see this momentum. I mean, it's been a remarkable name to look at, especially when you look at the chart. I mean, like the greenest candles and a whole new trend we're seeing now to the upside.
Yeah, I mean, a huge move off the back of the announcement of that deal. And think about the setup for this year. There was the expectation with this incoming administration that we would start to have more deal activity and more deal flow, and to see unlocking pretty much within this first full trading week of the year, essentially, and to see a deal in the streaming space on the first Monday, going back to kind of that old traditional merger Monday view, to see the first big deal, and that being this Fubo Disney deal. Disney taking about 70% with this stake. It joins together the live forces of Hulu Live with FuboTV, which is essentially sports-centric venue. Not to be confused with venue, because I will get into what has been circling around and what seems to be the triggers for why this deal happened. So investors, as you saw, were bullish on this. It made this huge move for Fubo. Even Disney shares moved higher initially off the back of the announcement of this deal, but Fubo up more than 300%. And we are starting to see, obviously analyst reaction, and we'll certainly hear more of that as we continue to see consolidation in this space. We had Wedbush out with their commentary. They have this outperform rating on Fubo. They said it reinforces their thesis around it. They have a positive thesis around it, saying that this combination creates a more dominant player in OTT. Obviously, we know with OTT, that's really the streaming space that we've been watching. And there's been a lot of disruption in this space, and we can expect to see more of that this year as we figure out who will be the winners and losers, especially when it comes to the changes within sports. And that's been one of the kind of big IP pieces that many of these streamers are jockeying for. So with this deal, Fubo receives $220 million. This settles some litigation that's been swirling around it, and there was a date that was coming to a head here, and that to me seems not necessarily coincidental when you think about the timing of this deal. This Monday was supposed to be a date where they were going to have some follow-up litigation after that temporary injunction that occurred earlier this year. Fubo had filed a suit accusing there was a partnership, and I don't mean to get too far in the weeds here, Jenny, between Disney, Fox, Sports, etc., that was going to create this new sports venue streamer, essentially. And Fubo had argued that this was anti-competitive, and so far a judge had been siding with it.
Okay, and I'm glad you mentioned that, because that is, to me, the most interesting part, and I could go down a rabbit hole about that, because I think that that's part of the story, but it's somewhat buried in the lead, and it's like, wait a second, I don't think there's any coincidences in these markets, especially not with these major corporations. I think that there was some agreements being made, perhaps, behind the scenes there, but I will say I was also following the analyst commentary. Roth MKM had some of my favorite, really saying that they called the Disney tie-up a potential fairy tale outcome for Fubo that could really help the company benefit in the streaming space. So they see more upside ahead. It's going to be hard to now match the momentum we've, of course, seen so far this week. But you mentioned the sports push right now for it feels like everyone's trying to get a piece of that pie. We are in peak sports viewership right now, as of course we have some of these major NCAA, or excuse me, college football games, and as well as, we're basically in the playoffs now for the NFL. So it's my favorite time to watch sports right now, but we did see Netflix did broadcast the NFL games on Christmas, and Netflix still, is the undeniable leader in the space. But now with more and more of this live content debuting Raw actually earlier this week, I have to imagine that's also not great for the rest of the entire space, because Netflix is frankly doing this live content, at least as of late, pretty well.
Yeah, and that's, to your point, Jenny, a big piece of clearly the why behind why this deal was occurring, because there's all this jockeying about who's going to own the sports rights for a lot of different things. Netflix had stumbled out the gate when it came to that boxing, their debut in boxing, essentially. They had all those hiccups and challenges with the demand for that. I don't know that they were ready for the demand that comes with big names within each of these different sports. So, they had to recover from that, and they did recover. Obviously, Christmas was big for them, and that was a big pivot in terms of what is traditionally how the NFL operates. So I think we are going to continue to see this jockeying around the ownership of broadcast rights around different sports. And so Netflix did pull that off much better when it came to Christmas broadcasts for NFL games. And that's unusual. That's not what we typically see. But again, going back to the Fubo deal, making this partnership kind of cleared the road for the regulatory concerns they had around venue. And a venue, obviously, now this involves a payment to Fubo, that $220 million payment, and then also it clears the road for a loan from Disney down the line as well, multi-million-dollar loan there as well. So that settles those claims about anti-competitive behavior for the sports streamer venue. Their concern with venue was not just that it's narrowing the options for consumers, because Fubo is obviously a big player within sports, especially international sports, but it could lead to, and this is where the judge had a certain view, at least in terms of a temporary view, pricing pressures for consumers and potentially lead to inflation.
And as we all know from streaming our various services, it seems like it's the most expensive to stream sports. So I do worry about then that getting even more expensive. And part of it is really like the massive size of some of these leagues and to pay. I mean, it's a whole rabbit hole I've definitely gone down before. But yeah, I do hope it protects us as consumers, at least, that we're not continuing to see these price increases, although I'm sure that's ahead. And that's, frankly, I think the story with a lot of these names is it hasn't been a favorable really transition for consumers, but like Netflix now, of course, cracking down on canceling, and we're seeing various other platforms follow suit. We're seeing more and more restrictions made, so you obviously have to pay for each service you use, which I get, but I wonder at some point we'll start to see this price increase fatigue, because right now, even myself, I've started to be very mindful of where I'm subscribing, because as long as everything's now like $20 plus, I mean, you have to draw the line somewhere else. I feel like I'm just basically paying for a cable package at this point.
Yeah, and when I talk to the analyst community, the idea is that this year, the expectation is not necessarily going to be a winner-take-all. So obviously, Netflix has been the leader in streaming. But when it comes to viewership and eyeballs there, we may see not necessarily more fragmented, but more, you may see consumers start to return to cable, or there's a shift in how things are operating. For instance, Charter is trying something new this year, where for their customers, they're allowing them to sign up for cable and then have some streaming options as well. So if that goes off well, we may see that become a pattern and see other cable providers do something like that. And then that creates the new cable bundle, cable plus, if you will. So I think this year the expectation is we will start to see more deal activity and more consolidation within the streaming space. But it may be a marriage that we continue to see of the old with the new.
I know. I do feel like we're sort of moving backwards here. It will be very interesting to watch. I agree. I expect more consolidation in this space. I just think there eventually has to be. But as long as some of these companies, like the tech names, the Apples, Amazons, that continue to have the cash to be able to expand, I mean, it's right now a battle of like who's doing the best financially and who can continue to shell out, because content, as we know, is not cheap. But we appreciate it and appreciate that great insight on the streaming space. Really fun conversation as always, Diane King Hall, Senior Markets Correspondent for the network. Thank you so much for joining us for FOMO today.
You got it.